Good evening, everybody. Welcome to tradingrich.com. My name is Richard Adjei. I'm excited to present to you guys a, a very important video here today. So we saw the stock market sell off today. Yesterday we got a rally, but today the market sold off. What is going on? I've been getting DMs from members and people, friends and family asking me what's going on in the stock market. Are we at the top? Is this the end? Is this the beginning of the end? I would show you what is happening here in the market. So this is a very important video. You don't want to miss this. So make sure you watch this to the end. So without much ado, I'll go straight and share my screen here and show you what's going on. So over here, I do have the S&P 500. That is the ETF, the SPY, the ETF that tracks the S&P 500, the SPY. So I have here with me, this is the weekly time frame, right? So this is the weekly time frame. So what I'm going to do is I'm going to do simple technical analysis on this. Nothing complicated, just very straightforward to figure out what is going on. So here I go and take my trend line tool, my parallel trend line too. So here we have the COVID lows, right? COVID 2020 lows. I connect that. So this COVID 2020 lows. I connect that to sec here. Just trying to get this stuff. So this COVID 2020 lows. You connect that to 2022 lows, and then you extend it to Liberation Day lows. This is what you get. And then if you extend it, so here this is 2020 lows, this is the bear market 2022 lows, this is 2023 lows, and then the Liberation Day sell-off, right? That's the lows of that. So these are critical times. So this is bear market of 2020, bear market of 2022, the pullback in 2023, and then the bear market of 2025. So if you connect that, if you extend that, if you connect that to stretch that up, you form what is called a parallel channel. So what a parallel channel does in technical analysis is that it confirms the trend line, meaning that this trend line, this bottom trend line, which acts as support, is a very important trend line. So as an investor or a trader, you have to know where price is, right, at any point in time, right, to figure out whether it's the best time to buy more stocks or best time to offload stocks. Okay, so over here I do have, so if you look at this is the highs of 2021 bull market. This is the highs again of the 2021 bull market, and then we have here, this is the highs that we have here. So when you stretch this out, you're going to see that we have what? A topping tail candle, right? So we broke above it, and now what are we doing? We are confirming. Is this the beginning of the end? Is this the beginning of the end of the bull market? This is the $1 million question, right? But for now, I think that we are getting a pullback, right? A pullback, or if it works, we are going to get something like a correction, like a 10% correction. But I think that a pullback is what we are going to get. So what is a pullback? In technical analysis, a pullback is any decline from like recent all-time highs or recent highs by anything between 1%, 2%, or 5%, right? So anything less than 10% is called a pullback, right? If we get 10%, then we get what is called a correction. So a correction is only 10%, okay? And then we do have a bear market. If you say a bear market is when you get a pullback or a sell of 20% or more from recent highs is regarded as a bear market. So we got a 20% decline here during the Liberation Day tariffs sell-off. That was considered as a technical bear market. Okay, so this is where we are at right now. And then this was last week. We got here and we topped out. And what do? We continued to the downside. Is this going to continue further? That is the $1 million question. So I'll go here, and then I'm going to go to the daily chart to show you guys what's going on there. And then I discovered another parallel channel here. So if you connect this here, if you connect this over here, you have where is this? Just looking at this. So we connect here. So this we are going to connect this lows to that lows to over here. This is what we get, right? So we get this connection. So this is May 2025 lows, June. Then the tweets from President Trump that day that the market sold off, and then we have here going down. Okay, so right now we are at this point. So we are going to see tomorrow if the market is able to bounce there. So what I'm going to do is I'm going to connect this trend line and see if we can form a parallel channel with it to confirm that trend line, to see if it's a valid trend line or not. Let's check it out. So check this out. So we go from here, we stretch it out, and then what do we get? Bingo. So we got this, right? So this is the trend line. If I pull this trend line like this, let's get this to work here. I pull this trend line like this, and I push it forward. Boom, this is what I get. So this shows that this is a valid trend line. Okay. So here we got 1 hit, 2 hits, 3 hits, 4. So right now we are at the 4th level. So what I expect to see is that I expect to see a bounce tomorrow. I expect to see a bounce in the market that we are going to push. And this push is going to bring us somewhere here. Once we get here, we can figure out the rest. So what we can do is that we can get 2 things happening here. We could get a push up to form what is called a head and shoulders. Okay, so head and shoulders pattern. So let's check this out here. Let's look at this here. This is going to form what is called a head and shoulder. So if you look at this, so you have your left shoulder here. This is going to be your head, and then this is going to be your right shoulder. That is if we are unable to break above this, right? If we are unable to break above this bigger parallel channel, then we are going to form the head and shoulders. Okay, so that then is going to cause this now to the market now to sell. Then we are going to sell to the downside. However, if we break above it, then we are going to break out, and then we are going to get to the top here. So this is going to bring us to around 708 or 710. That's equivalent to 7,100 on the S&P 500. So that's what I'm looking at for tomorrow. So for tomorrow, I'm looking for a specific play, either a dip into this red line, which is the 50 SMA, and then we get a bounce and it pushes up, and we can those that day trade with us, we can day trade it, or we can swing it to the upside. Okay, but we have to be mindful of this area. Once it gets here, there's a potential for it to form a head and shoulders, which is a bearish pattern. So this is what I believe, right? I think that we are at the beginning of the end of the bull market. I do not think for once that we are going to be trading at highs 6 months from now. No, I don't think we are going to be trading at highs, because the real economy is suffering. The US economy is suffering. 22 states are already in a recession. It's just a matter of time, right? 90% of capex expense has been AI. That means that GDP without AI is like zero, nothing, right? So the economy is not growing. And now there's a shutdown which is happening. We've seen Amazon lay off the most amount of people in the history of the company. We have earnings from Chipotle that came out, earnings from DoorDash. DoorDash is saying that the consumer is suffering, the consumer is struggling. So this is not good news, right? This is not good news. So anywhere that you're hearing that the US economy is strong, it is not true, right? The US economy is struggling. And to make matters worse, because of the lockdown, the shutdown, we do not have any economic data coming in, any jobless claims. So we don't even know what's going on. So what I think is that 1 year from now, so mark this word, 1 year from now, right? And this is a bold call. 1 year from now, right? I believe that the stock market, I believe that 1 year from now, we are going to get the market to be trading somewhere here. You see here, over here, somewhere here. Okay, so this parallel channel is giving us a guide of what is about to come. Right, it's giving us a guide of what is about to come, and then it's telling us where price is going to go 1 year from now. So if you look at this, you're going to see that 1 year from now, we have this is going to come all the way here to the bottom of this parallel channel, right? And that's going to be around 527, which is going to be around 5,000 on the S&P 500. Okay, so right now it's not the time to go crazy to be buying stocks. If your YouTube influencer or your guru or furu is telling you to buy tons and tons of a selling stock, be very, very careful, because we are at the beginning of the end, right? We just have one last push, one last rally, possibly into year end, into the what's it called, like a Santa Claus rally into the end of the year. But next year or towards the end of December, we might start getting those cracks. And I've already seen that in the semiconductor. So I'll go to the semiconductor ETF SMH right now to show you what is going on there. So for now, this is my take. My take is that in the interim, we are going to get some kind of a bounce coming up. If that bounce fails, then we have this market can now pull back. We can get more pullback and we can go somewhere here. Let me show you here. This is the area where if we get a correction or the sell continues, we are going to come somewhere here, right? So let's do the measurement. Let's do a quick measurement of this to figure out where this is. So this is from the top to this area. That will give us approximately 11% correction. So this is going to be the correction, right? So if the market is to pull back to all this place, that is where, if it pull back here and it holds, that's where I'm going to be buying lots of stocks to ride it back up. That is if it happens between now and the end of the year. Okay. However, if that does not happen and we just recover, just do a quick pullback and then recover and push up, then I will not be going crazy. But if we come all the way here, we get a 10% correction, then that's going to be awesome, right? That's going to be awesome. And we are going to get that push to this area. That's the place where I think we are going to get the bounce and we are going to go up to the end of the year. So for now, my thinking is that if the market is able to hold this tiny parallel channel, then we can bounce there and push up and get to 700 on the SPY or 7,000 on the S&P 500. However, if that fails and the sell-off continues, so one thing that you have to notice is that the market has always, like anytime it sells, so there's a weekly time frame. Let me go to this chart here. Let me use this one. Anytime the market has sold, right? If you look at this, so if you look at this here, this is the weekly time frame. Okay. Anytime the market has sold, it has always bounced here at this teal blue line, which is the 9 EMA on the weekly, right? 9-week exponential moving average. It has always bounced there. Okay. So all the major sell in the market has always bounced there. Immediately we break this, that means that the market is in trouble. We are going to head down to this area. Okay. That's going to be the first area. Then if this place fails to hold, since it's going to be the first test, it might just bounce a bit. But if it fails to hold, then we can dream of this coming here to the target that I'm talking about. And that's going to give us that 10 to 11% correction, right? But for now, until this teal blue line breaks, everything should be fine. We should be good, right? But if this breaks anytime, so I don't think it's going to break right now. Maybe it's going to break sometime, maybe next year. But if at any point in time from now to the end of the year, this teal blue line on the weekly time frame breaks, the 9-week exponential moving average breaks, you know that something fundamental has changed in the market. That should tell you that we are coming to the beginning of the end, right? The end is near. Okay. So that's what I wanted to share with you guys. And now let's go to let me put back the lines. So this is what I'm looking at tomorrow. So tomorrow, what I'm looking at is that I'm looking for a bounce here, and then we can ride this up to the upside, right? However, if we break below this orange line, then we are heading down. Okay. If we break below this orange line, then we are heading down. So this is going to be really, really critical tomorrow, right? Are the bulls going to defend this trend line again, as they've done in several occasions? So this is the weekly. So it's either, if we hold here, we are going to go long. For those that day trade and swing trade, we are going to lean long, right? If we break below this, then we are going to lean short, and we are going to short SPY the S&P 500. Okay. All right. So that's a simple game plan. Next one is, so now that we have this, let's look at the SMH. Okay. So the SMH is the semiconductor ETF. So on Wall Street, there's a saying that as the semiconductors go, so does the market. And anybody that has been trading this market or investing in this market knows that the main reason why the market is trading at all-time high and at astronomical valuations is due to the semiconductor stocks and the AI trade. Without semiconductors like NVDA, AMD, Broadcom, MU, you will not get any bull market. Forget it, right? They are the main contributors of the AI trade. That is why NVIDIA has become the most valuable company on earth, overtaking Apple. Apple used to be the grandmaster of the market, the king of the market. And now NVIDIA has taken over that from Apple. Apple is number 2 for now, right? So that is a big deal because NVIDIA recently hit the 5 trillion evaluation, right? 5 trillion evaluation. Only a few countries have GDP more than 5 trillion in this world. That is US and China. Apart from that, no other country has that kind of huge GDP of 5 trillion and over. Okay, so NVIDIA alone is currently the most valuable company on earth. Okay, and that is the reason why, because of NVIDIA, because of semiconductor, because of the AI trade, that is the reason why we have this roaring bull market. If you take them out, there's no bull market. We will not be trading at astronomical values as we are in right now. So what I did was that I analyzed the SMH. So that's the semiconductor ETF that tracks the semiconductors, right? Like NVIDIA, Broadcom, AMD, MU, etc. And I realized that. So if you look at this, this is 2021. Okay, this 2021 highs. When we go to the bull market highs, look at the measurement from this is the yellow line here is the 200 week moving average, simple moving average, right? 200 week simple moving average, right? If you're a long-term investor, you want to buy, you will not go wrong buying stocks or ETFs that have been beaten down at the 200. That is where you get Black Friday sales. So very soon we are going to get Black Friday sale in a couple of weeks here in this month. As an investor in the stock market, there's also Black Friday sale. Black Friday sale comes when a stock or ETF or whatever asset you are trading, it could be crypto, it could be Forex, whatever it is, if it is trading below or at the 200 week simple moving average, SMA, then it means that that stock is undervalued. So that's the time to load the boat. That's the time to buy, right? Especially if we go into a bear market, that's time to buy. So here, if you look at the lows, this is our 2021 lows. Yeah. If you connect this and you take the measurement, it gives you what? The rally was what? 102%. Okay. Then again, 2024, when we got into the highs of 2024, you take the measurement from here again, you get what? Approximately 102%. And then here as well, this where we are now, from now to the top here is 102%. So On the flip side, right? On the flip side, anytime that we have gotten here, the decline has usually been 40% or more. So I believe that in the semiconductors have topped, right? I believe that they have topped short term. They are going to get us a pullback because they've been rallying a lot, right? They have topped in the short term. So you're going to see, I'm going to show you a lot of examples of semiconductors, right? And where they are at. So over here, if you look at this, you can see that this is a top and tail candle, and then we got this red candle here. This is the weekly time frame. If you go to the daily, look at what we're seeing here. So over here we got this top and tail candle on the daily here. We have this top and tail candle on the daily, and then we got this sell here. So we are holding what? The 20. So we shall see if it holds tomorrow. If we break, we are going to go down, and I think we are going to pull back. This can continue pulling back to somewhere here to 305. Okay, so that's what we are seeing in the semiconductor ETF. So if the semiconductor ETF continues selling, then you know that the stock market is in trouble. It's also going to sell. But I think that there's going to be some kind of a bounce, like what it did here, in the coming days, maybe tomorrow. Okay. All right. So now let's check out the semiconductor stocks. So I'm going to start with the king of the market, NVIDIA. Okay. King NVIDIA. So on the day of the FOMC, those that joined me to trade live, I mentioned that I was taking a shot on NVIDIA. Okay. The reason why I took a shot on NVIDIA, I mean, it sounded crazy because NVIDIA is the strongest stock out there. Why would you short the strongest stock? It's because of technicals, right? So for me, as a technical analysis trader, I follow technicals. I don't care what stock you are or which ETF you are. If my technicals tell me it's go to short, I take the trade. If it's a go to go long, I take the trade. I do not use sentiments to trade. I use data, right? And charts and facts, right? So technical analysis is not 100%, but it puts the probability in our favor 80% of the time. So it's something that you are going to be right 8 out of 10. 2 out of 10 times, you can get it wrong, which happens. I get some trades wrong. Some trades are red. But with technicals, if you know what you're doing, you are going to stack the probability in your favor. Okay. So why did I take that trade? So I took that trade because at the time I drew like a trend line. There's a trend line here that I connected. That was a trend line from I believe this was 2021. So 2021, there was one here, 2018. I think it was 2018, this one. Right. So I connected this trend line here. And if you go to the daily, you see that this had a topping tail candle. Okay. And with the topping tail candle, what I did was that I drew this red line here. I said, okay, I'm going to take the trade. Okay. Because this is a topping tail candle or a doji candle, I'm going to take a trade. I'm going to put my stop above this level. Right. If it comes and stops me out, I'll come out. Right. But if it works out, it's going to be great. So what did he do? It went back up again, putting in what is called, so this was the confirmation. This looks like approximately like a double top, or you can say this is your high, this is your lower high, which is a bearish confirmation pattern. So that was a confirmation. So here I added to my position, and then boom, we went down. Okay, look at that. That's 10%. So NVIDIA has corrected. As of today, NVIDIA has corrected. It is down 10% sell from its highs, recent highs, to where it is right now. So where is NVIDIA heading? NVIDIA still has room to come here to retest this red line, which is the 50 SMA. So once it comes here, I believe that we are going to get some kind of a bounce, and we can try to reverse, right? So if you look at it as well, you can see that there's over here from Liberation Day low. If you connect this, we have this trend line here. This one, connect this one here. If you connect Liberation Day low trend line to this one, we get this important trend line. So I believe that if NVIDIA comes, it is going to bounce somewhere here. It's going to bounce somewhere here, somewhere at 184 or the 50 SMA. If it fails, then all hell will break loose. It's going to sell. And then if NVIDIA is selling, if NVIDIA does not bounce, then trust me, the market is going to sell, right? The market can't do much without NVIDIA. Anytime NVIDIA is selling, you're going to see that the market is in deep red. Okay. All right. So let's look at NVIDIA's other stocks, the other stocks which are like NVIDIA. Again, let's put this trend line to test. So again, what we learned today, we learned about parallel channels. Let's put it to test to see if that parallel channel is valid. Okay. So let me go to my, let's go here, NVIDIA. Let's put it here. So here we go check out our parallel channel tool. Let's look for it. There we go. So we connect Liberation Day low. Okay. Move it. What's the closest? Where does it go to? It's not here, not here, here, right? So you need a minimum of 2 points to draw a trend line. The more points, the better. So if I move this, I stretch this out, take a look at it, take a look at it. Where are we going? So we're going here. Boom. So this is your highs. Let me put this here, put this down. This is your highs. So if you look at this, this is your highs here. Look at that. Okay, so that's what I see here. So over here, I can even stretch it down a little bit so that it touches here. So I get a valley. So this tells me that this trend line, bottom trend line, is a valid trend line. It's an important trend line because a moment you have a parallel to that trend line, it means that it's an important, powerful trend line. So let's look at it. So here, if you look at it, you can see that we have here. So you have there, you look at this low here, touch here, and then we touch it over here as well. So if this, it can be near to it, we have another touch. So I believe that we are going to get a bounce here that is going to go. So here, where did NVIDIA top out, right? It was what, at the 50% range of the parallel. So you see these dashed lines here is the 50% range. Okay, so typically stocks and ETFs respect the 50% level. So over here you have, if you check it out, look at this. So this is the 50% level, right? That's why you put in that double top, and then what did you do? It sold. Okay, so now over here, NVIDIA has its work cut out for it tomorrow. It must hold this bottom trend line and the 50 or face calamity, right? And that's going, if that happens, then the market itself is going to be in trouble, right? We are going to sell. So this has next area where this can come to is here, right? Next area where this can come to is here. And then if it fails, then we are going to come to previous all-time highs. So it's either here or here, right? But if this holds, we are going to bounce, and then NVIDIA can make additional highs. But for now, NVIDIA is on, lack of a better word, on hanging on the string, and it needs to defend that level to reverse. Okay. All right. So let's check out other other semiconductor stocks. NVIDIA's cousins or friends. AMD. Look at AMD. So AMD posted earnings. I mean, their earnings was good, but because AMD had been like has already, because AMD had rallied a lot due to the OpenAI deal, it couldn't move that much because any kind of move, any kind of rally from there, it's not going to move that much because it needed to produce a spectacular earning, right? Something akin to the cure for cancer, something great, something out of the ordinary for it to break out above this. So what do I see here on AMD? So AMD is, I believe AMD is going down, right? AMD is going down. So if you look at AMD closely, you are going to see that I set up this parallel channel here. So far it's breaking it, AMD still has more downside. My target for AMD to come here. This is the ultimate target if this sell continues. But for in the interim, next area is going to be here. So it's coming down now. It needs to come down to fill this gap. So here there's a gap that has been formed from here to here. It needs to come and fill that gap. So that's what AMD. So you can see that all the semis are what are declining, right? Next one. This one, AVGO. Let's check out AVGO, Broadcom. AVGO, same thing. It has also declined, right? Look at Liberation Day low. You connect the trend line. Look at this. Boom. Look at this trend line. So AVGO has its work cut out for it. AVGO must hold this trend line here. Or worst case scenario, it must hold this red line, which is the 50 SMA on the daily, right? It must hold it. If it fails to hold it, then we are going to crack. This is going to come down, right? And if you look at this, this went up, and what did it do? Is selling. So AVGO is also selling. Next one, AMD, MU. MU is defying gravity. You see that all the other stocks, all the other semiconductors are selling. MU is the only one which is resilient. Is has not sold, right? It is defying gravity. So let's check out. Let's use parallel channel again for MU and see if we can discover something. MU. So look at MU. There you go. Look at that. Isn't that a beautiful parallel channel? Look at that. So this is the highs of August 2025, highs of October 6th, and this is the highs of this time, which is today, right? So you see what did you do? This is a topping tail candle. So this is what I am going to do, right? I'm going to look to short MU because all the other semiconductors have pulled back except MU. I'm going to put my stop loss here. My stop loss is going to be above this yellow line. 1 cent above this yellow line, or I'll give it some room, maybe 1 point above this yellow line. And then what I'm going to do is I'm going to wait to see if we get a confirmation, right? A confirmation is a candle. Confirmation candle is if a candle opens below this red line, right? If I get a red candle opening below this red line, I'm going to look to short this. My stop is here, and I'll take the trade, right? First profit target will be at the 50% of the parallel channel over here. That's going to coincide with the 9 EMA. And then from there, we go down from there. That's going to be the 20. And then the bottom of the parallel channel. So this can give you, so here, this could give you, so from here to here, we can get to the bottom of the parallel, we can get a 16% short on the equity. That's going to be fantastic. So MU, I'm watching MU closely, and I'm going to look to take that trade. I took one on NVDA, worked out very nicely. From I've been holding it since the FOMC, and it finally cracked this week, right? So again, MU is looking like a good one. So this is something that I'm looking at to short in the days ahead here. If the trade triggers, the trade is only going to trigger if we get a break, a red candle breaking below this, then we can take the trade and put our stop above here, the top of this, like give it like 1 point up, allow it, give it some wiggle room, and then gain it. So here, the reason why I'm getting is that last time price came to the top of this parallel, what it is sold. Last time price came here, sold. Last time price came here, sold as well. So I believe it's going to do the same thing here and sell. Okay. So I hope you guys learned something from this video. So this video is very, very important. So you want to check out the semiconductors, right? And remember, always remember that as the semis go, so does the market. As we go into 2026, what is going to be very important for all the, so look, if you're a long-term investor, look at your portfolio and look at stocks that are overvalued, right? From a fundamental standpoint, right? You have to ask yourself that, do they justify that valuation? This year, a lot of stocks have gone up, which are not up due to the value of the company. They are up because of hype, because of AI, because of that. 2026, most stocks are not going to have that free ride anymore. They have to prove their worth. They have to prove their high valuation, right? Without that, the investors are going to punish them. Wall Street is going to punish them. So the key words for this video or take-home message is going to be full year guidance 2026. Full year guidance 2026. FY 2026 is going to be critical. So you are going to be seeing stocks like Oklo. I'll show you Oklo. So this is the reason why I say this is the beginning of the end. Most of these stocks that are high flying, they will not be trading at highs in 2026. By mid 2026, most of them are going to be demolished, right? They are going to be demolished because they will not be able to prove that high valuation, right? Justify that high value. One of them, look at this, Oklo. Oklo is a company that does not made any revenue. They don't have any revenue, right? So imagine a business with no revenue and it was trading at what, $193. This stock used to trade at $50 or something. In October 2024, it was a $10 stock. And this has gone all the way here, right? 1,850%. Look left, 1,850%. So you see what's happening? This has sold off, right? So Oklo is a stock that I've been saying in the community that I'm going to be shorting it. So I mean, got short this one. I'm looking for it to go down to come to this area. I'm looking to see if we can get it to continue going down. But Oklo is is overvalued. So a lot of stocks are overvalued, and now we are beginning to see that these stocks are cracking. So if you look at this is your head, this is your left shoulder, this is your right shoulder here, and then this here. Look at that, right? So this is your head and shoulder. We still have more room. Oklo is going to come here. Look at here. 85, somewhere at 85, or at least this place. But 85 is a possibility. So this still has more downside to go. Okay. So remember the take-home message, FY 2026. Full year guidance 2026. Most of these stocks. So check your portfolio and make that assessment. For me, I have already started offloading my XOXL. So XOXL is the leverage ETF for the semiconductors. For those in our community and those that have attended my master classes that I did. So the master class I did on April 6th, was a Sunday. I told those attendees that they should buy XOXL. And I mentioned that the stock market was going to go back to all-time highs. At the time that everybody said the following Monday was going to be Black Monday. And on April 7th, folks in my community, I told everybody that they should buy XOXL. So you can buy the shares, you can buy the options. So we bought the $12 call options. Okay. So the $12 call options and also shares. So if you look at the shares, let's use the shares for as an example. Like let's go from here, somewhere here on the 7th. So from here to here, where it is now is what? Look left, that was what? 513%. That's the move, right? So already made 5x return on investment for the equity. And for the options, I had the January 2026 options, $12 calls. Look at it. I'm just rolling. Look at this. Look at that. This going. Look at this. See. So this, right? This here, purchase this at $2. That's $200. So in options, any number that you see here, you multiply by 100. That's how much it is. So for $2, like $200 to 3,200. Do the math, right? Do the math on that. That's 15x return. So with 15x return, what do I have to do? I have to offload. So I've offloaded majority of it, right? Majority of it. I just have only one left. Only one left. So that one is like this one. It's only one left, right? Only one left that I'm going to be holding. And I've converted some of them. I converted some of them into shares and I held them. So right now, there's no point holding them because we are coming to the end. This is the beginning of the end. So there's no point holding them. So what I'm going to be doing is that I'm going to start accumulating the opposite of this. XOX, this one. the bear ETF for semiconductors. So basically, if the semiconductors start declining, this one is going to go up. Okay. So what I'm looking at is I'm looking for it to break above here, this $3 level. So I set an alert here to let me know when this breaks to start buying. So I'll start accumulating this for the bear market, right? So I'll start accumulating here. So by the time the bear market goes into full-blown bear market, I'm going to get this to move. So the same way I caught XOXL, I'm going to cut this at the bottom and ride it up. Okay. So I hope this was helpful today. I hope this was valuable. Thank you for watching the video. If you've not subscribed, please subscribe to this channel. Hit the like button, put in the comments what you learned today. Let me know that this was valuable, and also please share this with your friends and family. Thank you. See you in the next video. Bye bye.